Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is December 19 and we're starting from euro-dollar pair with Jakub Nowak. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. Their growth became limited because the test of 1.0928 took place when the MACD line moved upward quite sharply from zero. Sometime later, another test occurred, and this time it provoked a sell signal since the MACD line moved to the overbought area. This led to a price decrease of around 15 pips. Volatility remained low because the market ignored the disappointing data from Germany and the indicators that came from the US. Most likely a similar situation will be seen today if the CPI data for the eurozone remains unchanged. But if the report aligns with forecasts, euro may increase. For long positions, buy euro when the quote hits 1.0936 and take profit at the price of 1.0966. Growth will occur if data from the eurozone indicates further inflation growth. When buying, make sure that the MACD line lies above zero or rises from it. Euro can also be bought after 2 consecutive price tests of 1.0919, but the MACD line should be in the oversold area this time, as only by that will the market reverse to 1.0936 and 1.0966. For short positions, sell euro when the quote hits 1.0919 and take profit at the price of 1.0892. Pressure will return in the case of weak indicators for the eurozone. When selling, make sure that the MACD line lies under zero or drops down from it. Euro can also be sold after 2 consecutive price tests of 1.0936. But the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.0919 and 1.0892. The next stage of our review is the next major. It's time for GBPUSD, presented by Dean Lau. The GBPUSD pair is in a corrective phase from the 1.2800 level, leading to an increase in short positions, causing the British currency to depreciate by approximately 1%. On the 4-hour chart, the RSI downwardly crossed the 50 middle line, indicating an increase in the volume of short positions in the corrective phase. On the same time frame, the alligators' MAs are intersecting each other. This technical signal suggests a slowdown in the upward cycle. The corrective stage is just a tactic in the current upward cycle. There are no crucial changes in the price, so if the quotes return above the 1.2700 level, this could indicate an increase in long positions. As long as the corrective phase persists, it may persist for some time. The comprehensive indicator analysis in the short term and intraday periods indicates a corrective phase. indicators signal an uptrend in the medium term. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Topos. Early in the European session, gold is trading around 2026, within the uptrend channel formed on December 15. Above the 21 SMA and above the 200 EMA. On the H1 chart, the asset's upside potential seems to be exhausted. In case the price closes below 2020, gold could suffer losses sliding to 2007, the lower boundary of the descending channel, or even to 4.8 Muri level around the psychological level of 2000 USD. According to the daily chart, gold is in a neutral to bullish trend. It's trading just above the 21 SMA, which indicates a potentially rally in the short term. This moving average lies near 2018, which suggests a continued advance provided that gold stays firm above this level in the coming days. On the other hand, if the price falls below the key level of 2018, below the 200 EMA, gold could extend weakness, heading for the psychological level of 2000 USD, and even to the 200 EMA on daily timeframe chart at the 1937 mark. According to the Fibonacci levels, gold reached 38% level as part of a technical correction from the high of 2145 to the low of 1972. This could be a sign of a continued downtrend. So, if the price dips below 2015, the downtrend will resume, with gold diving to the psychological level of 1900 shortly. Thus, our trading plan for the next few hours is to go short below 2024 or below 2020 in case of a breakout of the ascending channel. The levels of 2015, 2007 and 2000 can be seen as targets. The Eagle indicator has been given a negative signal since December 15, which confirms our bear case scenario. And finally, here's Laurie Bailey with USDJPY currency pair forecast. Let's have a look. On Monday, the USDJPY pair surpassed the target level of 142.70. But this morning it went below that level. The Marlin oscillator is slightly turning downward, easing from the area close to the oversold territory over the past 2 days. The oscillator is still far from being oversold, so increasing corrections are considered as a way of easing tension amid a strong downtrend. We can anticipate the Marlin to make progress within the green descending channel. It appears that the price aims to test strong target level of 140.35, which crosses the nearest embedded line of the global descending channel. On the 4-hour chart, the price settled above the level of 142.70, with 2 candles, and quickly returned below it. a similar pattern is forming on Marlin, returning below the zero line after a brief excursion above it. We expect the price to fall through the intermediate level of 141.23 to 140.35. That's all for today. See you online soon and good luck.